Hello, my name is Thomas Abraham, Research Analyst at Mirae Asset Sharekhan, and in this sector update video, I will take you through a comprehensive review of the hospital sector. Today, we highlight 4 buy-rated picks from our May 2026 Sharekhan report: Apollo Hospitals, Global Health, which is Medanta, Rainbow Children's Medicare, and Yatharth Hospitals, each offering distinct strength amid capex cycles and policy boosts like Ayushman Bharat. India's hospital industry is booming, driven by rising incomes, insurance growth, and yet slowed down by critical low bed density, 1.3 beds per thousand versus global 2.9, creating massive tailwinds for quality providers. Valued at $75.3 billion as of 2018 as per IMARC, it has galloped at a 14.4% CAGR to 193.4 billion over the period 18 to 25. In the next decade or so, the industry is expected to clock a CAGR of 7.2% by 2034, with the private hospital segment growing at a faster clip of around 10.6% CAGR. There is another interesting trend emerging in this sector: the rising penetration of insurance. In major multi-specialty hospital chains such as Apollo or Max, private insurance accounts for 30 to 43% of the revenue mix. This has also surpassed the share of cash, OOPE, that is out of pocket expense, and self pay, and even government schemes such as Ayushman Bharat and CGHS. What's the main consequence of this? Improvement of ARPOB, which is average revenue per occupied bed, and bed utilizations. However, despite increased penetration of insurance, India trails in the healthcare sector with respect to global peers, not merely for shortage of beds. The first stock for our coverage is Apollo Hospital Enterprises Limited. India's largest integrated chain with 76 hospitals and 1,325 beds, Apollo delivers unmatched scale, brand power, and diversification. The hospital is pursuing 8,200 crore capex to add 3,500 beds by FY28, with the FY27 demerger set to unlock 15 to 20% value. We have a target price of 9418, justified by premium ROE greater than 18%. Key factors in favor: 76 hospitals with an aggregate capacity census of 10,322 beds, market leadership with unmatched brand recall, disciplined expansion for additional beds and focus on tier 2 markets, capital program totaling 8,200 crores, resilient financials with 19% revenue CAGR and 25% EBITDA CAGR, expected benefits from demerger of diagnostic and pharmacy. Key risk: capex program delays, challenges in healthcare restructuring, regulatory and tariff headwinds. We arrive at a target price of 9418. Up next is Global Health Limited. The premium multi-specialty player dominates under-penetrated Northeast India with an ARPOB of Rs 60,000 and 60% occupancy with 3,000 beds. With Rs 4,000 crore capex doubling to 6,000 beds via Greenfield in Noida, Mumbai, Guwahati and Varanasi. Quick EBITDA positivity in 18 to 24 months, stellar OCF by capex of 1.5 to 3x, and net debt by EBITDA of 0.2x ensures cash cushion ramps. We have a PT of 1494. Key factors: strong network in key cities, especially in North and East India, new capacities in NCR, East and Northeast India and Maharashtra, robust operating matrices, cash-backed expansion for reduced debt exposure. Key risk: stiff competition from peers, regulatory changes, expansion risk. Operational vulnerabilities: we remain conservative on near-term ROCE and EBITDA, hence the valuation is slightly below the peers. The next stock in our coverage is Rainbow Children's Medicare Limited. The niche pediatric perinatal leader with 2,375 beds leverages a hub-and-spoke model, capping capex of Rs 260 crore annually and delivering best-in-class EBITDA margin of 30 to 34% and a negative working capital days. NCR entry adds 455 beds in a high fertility zone. Sticky family demand fuels resilience and superior FCF. We have a target price of Rs 1,534. Key factors in favor: catering to a niche market with wide potential, strategic expansion into high-income, high-fertility corridors, hub-and-spoke model for resilient margin and spending, unique doctor engagement model with 24/7 availability, robust financial performances and ARPOB. Key risks include specialized talent attrition, birth rate shifts, seasonal illness, and multidisciplinary rivals. Execution and regulatory obstacles. We have a PT of rupees 1534. Finally, we have Yatharth Hospital and Trauma Care Services Limited, a fast grower across 9 North India hospitals with 2,550 beds. Yatharth shift to complex cases 55% mix and cuts government revenue to 25%, powering EBITDA margins at 25% via acquisitions and referrals. Clean balance sheet with a near zero debt, funds expansion. We have a target price of 1015 at 35x FY 2080, blending agility with discipline. Key factors in favor are improving case mix, which shift towards specialties, greater dependence on private insurance schemes, high profile professionals, premium care. The key risks include acquisition integration issues, regional competition, regulatory and cost headwinds, along with expansion execution obstacles. We have arrived at a target price of 1015 with a buy rating. To sum it up, our overall view on the hospital sector is positive, banking upon the strategic expansion lined ahead. Growth prospects look bright. Trusted brands have built up a formidable pan India presence, and India is primed to be the next global destination for surgeries. Shortage of beds and capacities in Tier 2 and Tier 3 cities remain a crucial weakness, while red tape hassles, price caps, and brain drain of qualified professionals are key risks to factor. What's your view on the sector? Will it overcome these logistical and utilitarian obstacles? Let us know your thoughts in the comments. All our research offerings are now available in Research Center, including daily calls, in-depth reports across equity, F&O, mutual funds, and more. Scan the code on the screen to start your 15-day free trial today. Thank you for watching. Happy investing.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.